Welcome to the tutorial on auditing. This is the third part on the introductory issues of auditing. In this tutorial, we are going to learn the objectives of auditing, types of errors, and types of fraud. What are the objectives of auditing? We can see the objectives of auditing can be categorized into three broad sections. First one is main objectives, second one is secondary objectives, and third one is specific objectives. What is the main objective of auditing? We can see the main objectives of auditing is to express the expert opinion by an auditor on the quality of the financial statements, whether the financial statements are representing the truth and fairness of the financial performance and financial position. Financial performance is expressed in the profit and loss account, income statement, and financial position is disclosed in the balance sheet, statement of financial position. What are the secondary objectives of auditing? We can see there are two broad secondary objectives of auditing, which are detection and prevention of errors and detection and prevention of frauds. What is errors? Errors are those mistakes which are done unintentionally. Errors are made unknowingly by anyone who lacks the knowledge of accounting or due to oversight on the part of the individual. That means errors are done unintentionally due to lack of knowledge or lack of expertise. On the other hand, what is fraud? Fraud means making any misstatement intentionally. False representation or entry, record made intentionally or without belief in its truth with a view to defraud somebody. To defraud somebody or the users of the financial statement, there may be a intentional mistake. That type of intentional mistake or false representation is known as fraud. And the secondary objectives of auditing is to find out the fraud and prevent the fraud, as well as detecting the errors and preventing the errors. What are the specific objectives of auditing? We can see generally auditing refers to financial statement audit, but there may be some audit which focuses on any specific areas like operational audit, management policy audit, cost audit, etc. That means there will be a specific objective in respect of each type of, the above types of audits. That's why these types of audit has a specific objectives. Now we are going to learn about the types of errors. We can see the first one is clerical errors. Clerical errors are committed in posting, totaling, and balancing. And clerical errors are made by the clerk who maintains the accounting. Two types of clerical errors. One is errors of omission, another one is errors of commission. What is errors of omission? When one transaction has not been recorded, when one transaction is omitted, in that case, that type of omission of recording is known as errors of omission. What is errors of commission? We can see when a transaction has been recorded but has been wrongly entered in the books of original entry or posted in the ledger. I mean, whenever you have recorded the transaction but you have recorded in wrong way in the book of original entry or in the ledger, and that type of error is known as errors of commission. Now we can see errors of principal. Errors of principal arises when the entries are not recorded according to the fundamental principles of accounting. I mean, when the accounting principles are not followed in recording the transaction, in that case, those errors are known as errors of principal. After that, we can see compensating error. A compensating error or offsetting error is one which is counterbalanced by any other error or errors. I mean, when one error is counterbalanced by any other error, that type of error is known as compensating error. And last of all, we can see errors of duplication. Errors of duplication arise when an entry in a book of original entry, I mean primary book or journal book, has been made twice. I mean, when a transaction is recorded twice in the book of journal, in that case, that type of error is known as errors of duplication. Already we have learned that errors are done unintentionally due to lack of knowledge or lack of expertise. We can see errors are clerical errors, errors of principal, compensating error, and errors of duplication. Now we are going to learn about the types of frauds. We can see there are three types of frauds, and we have learned that frauds are mistakes which are done intentionally to defraud somebody. I mean, any intentional mistake by doing the false representation of the facts is known as fraud, and fraud can be done by embezzlement of cash, misappropriation of goods, and fraudulent manipulation of accounts. So these are the types of frauds: embezzlement of cash, misappropriation of goods, and fraudulent manipulation of accounts. What are the possible ways to embezzle the cash? Cash may be misappropriated by omitting to enter any cash in the cash book which has been received. I mean, intentionally, wherever someone is omitting to enter or record the cash in the cash book. And the second one is whenever entering less amount than what has been actually received. And the third one is making fictitious entries, I mean any false entries on the payment side of the cash book. And the fourth one is entering more amounts on the payment side of the cash book than what has been actually paid. These are the some ways by which cash may be misappropriated by the fraudster. And the second type of fraud is misappropriation of goods. Here goods means product. When any person who has been entrusted, I mean who has been given the responsibility to possess of goods, and if that person fraudulently uses those product or goods or keep those product or goods to him as his own without the permission of the actual owner, is called misappropriation of goods. That means if any person use any goods or product without permission from the actual owner, in that case that type of incident is known as misappropriation of goods. Appropriating, I mean taking goods dishonestly for one's own use without permission of the actual owner is called misappropriation of goods. And the third type of fraud is fraudulent manipulation of accounts. These types of manipulation are done by the higher level authority, I mean directors or managers or any other responsible official, with the purpose of showing more or less profit what actually they are. I mean manipulation of accounts are done by the higher level management, and the main purpose is to show more profit or less profit. We have learned that there are three types of fraud: embezzlement of cash, misappropriation of goods, and fraudulent manipulation of accounts. Thank you.